And just like that, ladies and gentlemen, did Google just save the market? My name is Hamilton. I'm here at the Trading Initiative. Let's talk about it. April 25th, 2024. Yesterday after hours, Meta reported, and they got crushed. Earnings came out, market crushed them. They were down nearly 20% at one point. It was the single largest drawdown of a stock in dollar amount ever. $1 trillion company losing 20% of its market cap after hours set a record. We opened up this morning, or at least pre-market, hopped online, and we had very low expectations, right? The market was down, obviously. Meta was down like 15%, I believe, pre-market. And then some data came out. Data came out showing that GDP did not match expectation, came in under, and core PCE was way over. This magical word called stagflation has been thrown around. And realistically, I thought the dollar immediately was going to rally. As a matter of fact, it didn't really a whole lot. I was expecting a 106.5 and potentially even a pop up to 107, and that's as far as we got, up to 105.98, nearly 106, and then we died back down. I really don't think this market is going to go as low as I'd originally thought if the dollar is not going to rip up and over 106.5 and into 107 territory. I don't think it's going to be that bad. As a matter of fact, the dollar ended down today, even though the crazy numbers came out. PCE up, GDP down. The dollar did not rally. That's so strange to me, but that, from a technical standpoint, tells me maybe this market correction is not going to go as low as I'd originally thought. The dollar is not responding the way that I expected. Bonds potentially could be finding a floor. I have no idea yet, but you would expect that to happen if the market correction is over, considering bonds in the equity market over the last 2 years have been highly correlated. The equal-weighted S&P 500 has been up since Friday. It did close red today, but over the last 3 sessions now, it was green, and today had a hell of a rally. QQEW, although it did end up down today just slightly, a huge rally. Meta rallied. Insanity. Just the straight indexes filled the gaps, and this is important, guys. The speed at which gaps get filled tell you the strength of the underlying trend. SPY, the Qs, gap down big this morning because of the Meta earnings. And like I said, coming into today, I had very low expectations. Now, I'm not net short. I don't have any short exposure, actually. And so I'm okay with the market capitulating and continuing to break down because I'm looking to buy down here. I have no idea if we're going to get down here anytime soon, but that's kind of my buy zone. But market internals have been holding up since Friday. We're going to talk about this more tonight during the webinar. It's really surprising to me to see the dollar's not reacting the way that we expected. Today was actually pretty good. And then Google came out and absolutely destroyed earnings. We're currently trading 176. From close, we are currently up 12%. This is not a small company, guys. This is a $2 trillion company that's up 15%-ish after hours. 12. This is huge. Microsoft reported as well. And although we're not up and in all-time highs yet, this is a huge move as well. We're up 5%. Once again, this is not a small company. It's a $3 trillion company. Did Google and Microsoft potentially just give more life to the market? Are they canceling the correction? These are questions that we ask ourselves inside of TTI. And although I'm not confident enough to say, yeah, that was the bottom, there's a lot of underlying strength in this. The Mag 7 stocks have really masked a lot of the strength because the indexes are going to be poorly reflected based off the Mag 7 weighting. Mag 7 meaning Tesla, Meta, NVIDIA, Microsoft, Google, etc., Amazon. The equal-weighted S&P 500 in the Qs, a truer reflection of the average stock within the indexes, is holding up relatively well. It's really, really surprising to me. Today, earlier, I opened up a small position in Apple. You can see the little circle there that I had identified inside of TTI. We like this as not necessarily the strongest trade in the market, but a high risk to reward trade. You can see, I'll set it up for you really quick. We were looking at something like this, placing a stop right below that candlestick low, somewhere near 163.5. And we have a take profit up near the 200 area at all-time highs. That is a 5 or a 6 to 1 setup. That is pretty good. If the market does find a floor somewhere around here, that's a pretty goddamn good setup for Apple. It's a small position, and it's a very tight stop. So if it doesn't work, I'm going to lose a couple bucks. But if it does work, I'm going to make a bunch of money. Also added in more position into BAC. Really like this breakout here in financials. Looks like it's upcoming here. We can actually look at XLF itself. Nice rally today to fill the gap. Most things started off pretty much down, and a lot of them, most of them filled the gap. Look at energy continuing to break out. This market, although it's tough, is not conducive with what I would expect to run for the hills. It doesn't feel like this is the type of market that's about to roll over and enter a new bear market. Correction, yes. Pullback, yes. That's why we are in the buy the dip mode. We have not bought the dip yet with size. We are still currently waiting. But is today that day, that defining difference? Did Google just change the way we're looking at the market? Could be. I'll be back with you tomorrow, Friday, after the session. We'll go through all of it in our Markets in Focus video. More in-depth 20, 25-minute video. Let's talk through it. This week has been incredibly difficult, but I'm going to be honest with you. Has it been more difficult for bulls or more difficult for bears that got caught shorting at the end of last week and have had to hold through this chop/rally this week? It's incredibly challenging shorting primary uptrends. God bless if you've made money doing it, but god damn, it's a stressful trade, guys. My name is Hamilton. I'm here with the Trading Initiative. If you like this type of content, please like and subscribe. Leave a comment below. We have a webinar tonight at 7 p.m. Eastern Standard Time, depending on when you watch this. I highly encourage you to watch it. Attend if you're available while we're live. We're going to be going over what we look for when we buy the dip. It's going to be really good. We look at market momentum. We're going to look at market breadth, how we want to buy the right side of the V, and some other classical intermarket relationships that might give us an edge. Link is in the description below. I'll catch you next video.